Good afternoon everyone and welcome to the Zenfinex monthly forecast videos for July. Today I'm going to be providing an update on the previous crude oil forecast by again running over the recent supply and demand news events, which as always act as the catalyst for prices. Then I'm going to move on to the chart and mark the key levels of where trading opportunities could come from. And at the time of recording this video, oil is trading at around $74 per barrel after it started the week on the back foot. So previously I've spoken about the ever-growing demand factors and how fuel demand has been boosted by key markets including the US and China, which continue their economic recovery from COVID-19. Now, although this is very much the same, there's been a reminder to markets over the last couple of weeks that the recovery from this COVID-19 pandemic will not be as straightforward as it first seemed. Now, the Delta variant of this virus is spreading rapidly from Asia to the US, leading to a spike in infections and renewed lockdowns in some regions that we've seen as well. This variant is also surging in the UK, with infections said to reach around 50,000 cases per day. And I think really the most concerning thing about this is the World Health Organization, the WTO, warning that the Delta variant was becoming dominant and many countries had yet to receive enough doses of vaccine to secure their health workers. If we get a case where we start to see health systems being overrun, we may start to see countries slip back into lockdown again, especially as we approach the winter months. With that being said, the UK is still cracking on with the easing of lockdown restrictions from the 19th of July and are allowing double-jabbed citizens to travel to amber-like countries without needing to quarantine. So when you read it like that, the encouragement to get people out and spending money on flights and holidays, that's still there, which is representing really a real change in strategy from last summer that we saw. With regard to supply factors, there is optimism from traders that US crude inventories are expected to fall for an 8th consecutive week, while gasoline stocks are also declining as well. Now, this is the continuing story that supports oil prices at the moment. And meanwhile, the OPEC is yet to make any progress between Saudi Arabia and the United Arab Emirates last week that prevented a deal to raise oil outputs, making another policy meeting this week quite unlikely. And we also had Russian President Vladimir Putin and his US counterpart Joe Biden. They didn't discuss OPEC or global oil prices during an hour-long phone call on Friday. So interesting there. Okay, so taking a look at the chart now, and I've left the same drawings that I drew on the chart from last time out, from the last oil video that we done. And as you can see, this is the price we was at the moment, and I wanted price to react from this order block level here, where we broke structure to the upside, which is represented here by the BOS. And as you can see, we wicked into this order block as expected, and we did actually run up to our take profit of around $75. I did think from there that we may start to see a bit of a short-term fall, and as you can see, that's exactly what's going on right now. And I'll delete all these drawings so we can just get a clean outlook now, because what happened in the past is in the past, and we want to know where we're at now. Well, this drop, you can take it two ways really, depending on your bias for oil. We have had it break a structure low here from up here. It's broken this structure low, but at the same time, all it's done is come back and test this 200 moving average. So you could argue that price is still bullish, and I think that's a fair comparison as well. I think if we broke below something like $70, with it being a psychological level and quite a significant swing low on the chart, then I'd start to think that maybe we'll start to see oil turning over. But for now, you can see where we are at the moment, around 74, approaching 75 again. I think the first thing we want to look out for is what happens with price once it reaches around 76. Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenfinex.co.uk, you will see the offer in front of you straight away. And this is that you can trade Forex on a standard account with raw spread plus zero commission. And now Zenfinex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. Around $76, $77, will we create a new higher high, or are we going to start to turn over? If we're looking to sell oil off the back of the concerns around the Delta variant, if that accelerates quicker than everyone thinks it will, and the lockdown ease and doesn't go to plan, and I think this is a valid selling entry, which is this 4-hour order block which come down and run and broke this structure here. Now if we could get an entry from this level, I think realistically we want to only really be targeting excuse me, we only really want to be targeting around $72, which would be another test of the 200 moving average as well. If we can get a close below the 200 moving average, then we can look further for any more selling opportunities. In terms of buying opportunities, what I'd like to see right now is we created this lower higher here, sorry, higher low here, excuse me, and what I want to see now is I want to see price run up and break these two highs here, these intraday highs. So you have this high and this one as well. If price can run up, and it may do it maybe in this candle, to be honest, if it does run up and break this high here, what I'd be looking for is either a quick fill of the price inefficiency that we have here, like I'm highlighting here, and maybe run up into this order block. Or alternatively, it breaks this high, goes into our 4-hour order block, and then we can start to aim for those take profits. Now where I'd have my take profits is first of all at around $77 for the rest of July, but I would also have a take profit and take some profits here at around 76, purely because we may get a reaction from that order block level, and it's best to take some chips off the table than to have a big reaction off there and then stop us out maybe even at our entry level. If we move down onto the 1-hour chart, really the story is the same. Can't quite refine that 4-hour order block any further than what it is now. So label that order block entry. Again, these are the highs to watch out for. We may get a situation where we approach these highs and we actually fail to break that, and then we start to look down at the swing lows at around 70 again. But in order for that to happen, I would need to see more signs of stress in terms of global demand prospects, because I still think that the vaccines are working so effectively against COVID in terms of COVID-related deaths. I do not see it being too much of an issue yet, but to keep an eye on it for sure. Also, just a quick note on the daily chart, we did need that correction from the 6th of July because the RSI was starting to look in overbought territory as well. Now I think that we can start ticking up, and there is still room in this indicator for it to go further as well. So that's it today for oil. They're my levels that I'm keeping an eye on. Maybe by the time you watch this video, you may see that it's already broke this structure high, and if it has, then look for that entry off of this order block here. Other than that, guys, please like and subscribe to this channel. As always, it helps boost the channel, and it's working really nicely at the moment. Keep dropping in your comments as well. Always reply to every comment on there because I like hearing your opinions on where you think oil could be going for the rest of July. Other than that, guys, take care, and I'll catch you all for the next video.